We are back with you here on the Market Day Report. I'm Marlon Bowling with you, your tour guide to the ag commodities. Well, let's take a look at what the grain markets are up to right now. And we'll go to the big board. We'll examine the corn market with our quotes provided by Bar Chart. Right now, fractionally weaker. They're just not doing very much here this morning. We have the December corn 1/4 cent lower at 4.80 1/2. That trading range, 7 cents from the top to the bottom overnight and this morning. The March contract is down 1/2 at 4.94 3/4 right now. Soybeans today, you have the November contract going into delivery tomorrow, so everybody's pretty much bailed out of that by now. January is down 2 at 13.17 1/2, and that would be about 14 cents off of our overnight high. A lot of weakness creeping into the soybean trade here lately. Now on the wheat, in Chicago wheat today, you have the December contract, a penny and 3/4 lower at 5.73 3/4. It's actually worked its way back a little bit. We had been as low as 5.67, I should say, earlier. And right now we're off of that by a good 6 cents or so. In Kansas City, hard red wheat today, you have December now 3 higher at 6.46. Look at the low, 6.32 1/4. So we've rebounded about 14 cents now in that one. We're now just a penny from the high of the day. December spring wheat down 1/2 at 7.19 1/4. Oh, we're about 2 cents from our high of the overnight and early morning trade in that one. Cotton market has been kind of holding its own. Right now we're only 20 points higher. We're at 84.58 right now. Overnight and early this morning we had been over 85 cents, but they kind of softened up a little bit. Well, in studio we have Mr. Chris Swift with us, and he is with Swift Trading in Nashville. Hey,
good morning.
Monday morning.
Yes,
Hope
sir.
you had a good weekend.
Yeah, fantastic.
Yeah, good to have you with us,
Yes.
as always. So, all right, what's your thoughts on the grain markets not doing much of anything here today?
It's not, and it's the perfect opportunity to be doing something. So while the grain markets are not doing anything, let's look at the beans for a second.
Okay.
Beans have got 2 million acres less. We're down to 49.6 on the bushel per acre. And looking at South America as probably the hinge now. If South America comes in really good, our bean prices soften. Something happens in South America and potentially our bean prices firm. So while we're sitting here doing nothing, let's build some courage to make cash sales if beans go higher. Now, corn probably not as much, but as the beans, if they move higher, if they don't, we couldn't have done anything to begin with. But if they would move higher by already owning a $15 soybean call, either in the May for old crop or November for new crop, then we can go in and let's say beans do jump up for whatever reason, it doesn't matter, up to that level, we can sell them with courage. I can now market new crop beans at $15 a bushel, still having that call option on if the market goes straight up. Market goes straight up, I still benefit from the call. If nothing happens at all and beans go down, I lose the premium of the that I paid for the option.
But in the meantime, you don't have to worry about making margin calls.
No, there's no margin call to it. I bought and paid for the option, and it's just to give me courage. There's no tell. What's going to be happening if beans are at $15 a bushel? I don't know. You don't know. But it's going to be a hot topic here on RFD TV if beans are at $15, and that's going to give you a little bit of a fear factor out there. Well, maybe they'll go to 16. Maybe they'll go to 17. At $15, we're going to make some cash sales of beans, and we're already got a profit in our option, and we still have more availability to the upside were it to continue higher. We're going to buy some courage is what we're going to do.
So, all right, let's compare that to corn.
Sure.
What about corn? That's a different story because of the carry out here.
Well, it's the carry, and I'm not real sure that corn has a bullish story. It may not be bearish, but there's nothing out there that I can see that would just instantaneously or even sometime in the next 4 or 5 months to really drive the price of corn up. One of our analysts last week made a really good point that we will most likely be vying for acres. Corn and soybeans will be vying for acres this coming year, and that might be able to produce a little bit of an undertone for both of those, but corn probably not as high of an objective. If you wanted to do that with corn, you might not just set as high of objective as what you do in the beans.
All right, now let's talk about this wheat market here that's dragging its feet, and it just keeps an anchor tied to the ground here at the bottom of the water. What do you do with wheat? Because it seems like there's no hope.
I think you market it. I think you get it out of the bins, you market it. We set 3 new contract lows in a row into Kansas City. We're already softening in the July new crop. We got ample rain coming in. There's going to be probably some shifts that's going to say wheat's going to be a bigger producer. And similarly, what you could do, if you were to get some sort of overseas action like what we've seen in the Ukraine, maybe that gives a little bit of a spurt to it. But the likelihood of $1 or $2 is probably not very good right now. I think you market it, get rid of it, and move on to something else.
The July new crop, Chicago wheat, is at a pretty good sized premium to the nearbys. And
yes.
We talked about that earlier today, that maybe that's actually a little opportunity. Well, there you can see it right there. 631 versus 573 right now. So, I mean, you almost have a 60-cent benefit right there.
Because this is not basis storage or anything. That's just what we're going to get for the new crop.
Right.
So that's not, we're not spending that difference in storage costs.
Yeah, just something to look at.
Yeah.
Okay, we'll come back and we'll analyze our livestock trade right after this. Come on back. We are back with Chris Swift, and now we're going to take a look at our livestock trade. We'll go to our quotes provided by Bar Chart. Here they are on live cattle. Mainly higher. You have to ignore October, right?
Right.
Yeah, okay. October's, I mean, we're almost in November. December, 62 higher at 182.85. In February, up at 90 at 183.85. Seems like they're gaining a little momentum here this morning. Feeders, still lower, but not by very much. November down 7. January down 17. March down 30 right now at 238.27. So mild losses, I guess you would say here. And then on lean hogs, higher across the board, roughly 30 to 50 higher. December up 55 at 71.02. What do you see happening here on this cattle market for the time being?
Well, the feeder cattle market is probably the most interesting simply because we've had a massive shift in basis. So we were trading a positive basis for the negative basis for the longest time where we had the futures trading premium to cash. Now we've had all the way out to the April contract where the cash market is now trading above all the futures. So a really big shift. It's about a $30 drop in the futures. It's about a $15 drop in the feeder cattle index. So now we've given every producer out there some opportunity to adjust whatever they had. If they were short hedges, then they can adjust some of those hedges. If they wanted to be long the market and needed to buy cattle, they're $30 cheaper now on the future side of it and $15 cheaper on the cash side. So I think this price break has done everybody some good. It kind of told those that are really, really bullish that opposite things can happen, and those that are needing that price break, well, they just got a pretty good sized price break.
Are packers okay with their supply coming in?
Well, I think so. What we're really noticing is still the decline in profit margin for the cattle feeder. So it was down to about $100 a head this last week. It's down about $44 from the week before. And as we know, feeder cattle prices continue to rise all through the summer. So going through the rest of the fall and into early winter, those will begin to really impact the profits of those cattle feeders there simply because they paid a higher price going forward all the way up to September the 25th, if I'm not bad mistaken. And that's where the high price was paid on the feeder cattle index.
Oh, okay.
254.10.
Good memory. All right, Chris Swift with us here in studio. He's with Swift Trading, of course, and always look forward to our discussions. Thanks for coming.
Absolutely, always a pleasure.
Appreciate that very much. Suzanne, I'll turn it back to you.